Yeah. So yeah, I can't hear anyone else. If you guys have any questions, just type them away or unmute yourself and ask a question or whatever, and we can just go through questions one by one. Today Euro was finally clean. I know it's been a bit of a rough week or two here for Euro's PA, but I think now that FOMC is done, we should have some clean price action next week. At least that's what I'm hoping for. Yeah, so we'll start this off. Does anybody have anything they want explained? Me too. Yes, perfect. Cool. How many trades do you do each day, and how do you prepare then not act out a plan? Today I took 2 on Euro and 1 on gold. I think last week I only traded 3 days, but I had a day where I took like 6 trades the one day, and I think I pretty much broke even on the day, barely made any money. The week before I had taken 6 trades all week. So I trade what I see. I don't really put a number on it, but if I have 3 or 4 trade ideas that failed, I will probably quit trading. So for me to take like 6 trades in a day, I have to win one of those first 4 trades and be sort of up on the day or have something that looks like it's succeeding. If I took 3 or 4 trades and I'm just on the wrong side, it's time to end my trading day most days. And as far as sticking to the plan, I think I've had enough big losing days, especially starting out, where you just realize that if you don't stick to your plan, you'll lose way bigger than you have to. So you just kind of, I can't really give you advice with that, but just stick to a trade plan. And don't just limit to a number of trades, but maybe limit to a percentage you're willing to risk. So on a funded account, if you're willing to lose 1% a day and you're trading 0.25%, that gives you 4 trades. If you're trading 0.2s, that gives you 5 trades. But if you're trading 0.5s, it's only 2 trades. I go more of a percentage base that I'm willing to lose than how many trades. But like I said, if I'm wrong 3-4 times, it's probably a good time to end my trading day because I'm clearly not clear-headed. When you have OBs that are valid, how do you filter out the ones with the best probability? Okay, cool. So we can talk about this today, actually. So today we had this demand here, and we kind of broke through it here. Let's just change that to demand. So right off the bat, you're probably like, why did I pull this and not this? Well, if we look at the original OB here, which you could have said was this black candle, well, it's been half mitigated. So if it's been half mitigated, I'm going to move up to the next one. When I took this short here, I targeted this OB and I targeted all of this liquidity. Now, how did I know that none of this was going to hold? I didn't, obviously, but looking at it, this has been mitigated. This wick has been mitigated. This wick has been mitigated. Mitigated. What is the first unmitigated demand we have? We have sell to buy wicks right here. And what is the absolute best demand we have in this whole range? I would say this demand here. Why? Because it did something. So you have your initial take the low, let's see, chalk bottom, and we have a chalk top. How did we complete this chalk? Well, the move initiated here. However, this OB kind of mitigated that. This OB really didn't do anything as it failed to close above this to complete the chalk. The real move came from here. So this to me is a strong point. This to me is inducement. This to me is a point that hasn't been mitigated. This is inducement. Everything in here has been mitigated. So the likeliness of it holding becomes a lot less probable. This is not an OB as it's been half mitigated. And the real move is you want to find the move before the momentum. Momentum started with this candle. So to me, this candle would be your true OB. So that's kind of how I filter stuff. And obviously you want to see inducement intact, but in theory, we're always targeting liquidity. And the short ideas today came from the 4-hour time frame. So if we go on the daily, we have a week low, which is right here. You have a week low, failed to put in a new high. I don't know where from, whether it's coming back here and then running this, or if it's just running this. But to me, this low needs to go. So I am all for shorts. That's kind of how I view things. On the 4-hour side of things, we're obviously very bearish. We have been for a while. So my expectation is for order flow to continue. Reversals are expensive, so they don't happen all the time. My question is, what time frame is necessary to use for entry, or can you use any time frame? So I use 1 minute. Hold on. I use 1 minute for entry. My analysis is done on 4-hour and 15-minute. So if we look at today's short, we have this wick here. If you actually take a look at the way this is your demand, you get a body close outside it that told us there is motive to keep going down. At this point, we were still bullish, but this closed outside the demand. Now, if we take a look at this, all your supplies are holding. So what's likely to happen when we tap this supply? In my eyes, I thought it was going to keep going down. So this would be your 10-minute sell to buy wick, or just a 15-minute wick, which is a sort of supply. If you pay attention, what happened? We took this low, this stayed intact. You get sweep of the highs, sweep of the lows. This area did it. Where are you going to go? You're going to target liquidity. It has to make sense as to why would price go there, and why was I willing to short? Well, 4-hour is bearish. You traded gold today. Could you go over it? I'm not showing that chart to anybody right now, because it's just some stuff I'm testing out and some stuff I don't want to share. So no, I won't be going over gold today, bro. But I'm totally willing to go over EU or whatever. It's not that I don't even want to share it. It's just stuff that I'm testing that I don't want to show anybody in case it steers people the wrong way. It's not just smart money concepts, so it's definitely not something I want to show at this point, as I'm kind of trading gold different than this. What else is there? So yeah, back to your time frame question, bro. I execute on the 1 minute, and if you can I speak through my mic? Yeah, you should be able to speak through your mic. Unmute yourself. Let's see. That trade slipped out of my hand. Don't always trust my analysis. That'll come with time.
Here up.
But yeah, time frame question. Execute on the 1 minute for now. I would stay off the seconds till you get it. Your trade just has to make sense. Were you able to unmute yourself?
Yeah, Rob, I can
wicks
hear me?
and how to choose them. Well, this wick here, if we just cycle through, let's see, so you have still the buy wicks there on like a 13-minute. So even if you look where price stalled right now, again, we came to another sort of supply. And the reason I pick these wicks is if I cycle through enough time frames, I know I'm going to find some sort of supply in there. And I'll pick what's cleanest. I don't like going much below 10 minutes. For this one here, I don't even know if I picked the 10-minute or what it was. I think I picked the 9-minute sell the buy wick for this, but you can't hear us. Okay, hold on. Let's see.
Rob, can you hear us?
Oh, there, I can hear you guys now. Perfect. Just hold on a sec. What is that? So AG audio. Okay, cool. That's good to know, because I think this happened to me once before. But I can hear you guys now. Feel free to talk. But yeah, the wicks are generally just me cycling through 10 minutes to 30 minutes. Just like this demand here, if you look at the 15 minutes, it's kind of, or this supply, I should say, it's kind of dirty, right? If you scoot over to the 20-minute, you have one clean weight candle, and you have a very clean sort of a supply. We came above it. We broke a 1-minute demand, chalk flip. I shorted this. I took some partials in here, and the rest broke even. I was really hoping it would go the other way, but whatever. But yeah, cycle through 10 to 30 minutes, and you should be able to find a POI. If you can't find one that's clean, maybe go down to the 9 or 8, but usually 10 to 30 will get you where you need to be. But yeah, whoever has a question, go ahead.
Hey, Rob, can you hear me?
Yeah, I can hear you, man. What's going on?
Okay. So I have two questions. The first one is wait, let me annotate here. Is regarding sorry, 1 second. This area right here. So you said the change of character takes place right here, but
Yeah.
wouldn't it take place right here because this is the wick that basically is a swing high, and then price breaks this swing low? So wouldn't this be considered the change of character over here, like when the candle breaks this point right here?
It depends what your trade plan is. So the way I look at this sort of demand, or this sort of a supply right here, disrespected this sort of a demand. If we were to just pull this wick, and we candle close below that, right? So now if you look at these fine details, if you candle close below this, so you got a full candle body close below, that's telling me that this supply still had some motive. No, you didn't really, you failed to close below this and create new structure, but you did close below this, disrespecting demand, meaning you cleared this liquidity and then you disrespected the supply coming up when you candle body closed above this. So I'll count this. If you wait
Okay.
for this move to happen, you might be sitting on your hands for a long time. And I'm not saying that's wrong. I'm just saying this supply disrespected a demand on the 15-minute. So this supply is a key point for me. And if it fails, that's my first clue that something happened. In the sense, I totally understand what you're saying. This would be a chalk complete in your eyes.
Yeah.
But now if you look at this whole time, you would have to sit out anything that was possible to take in here. You would have sat it out if there was a trade, right?
Right.
So that's how I view it. If a demand or a supply does something, even if it doesn't break structure, but it disrespects a demand, that and candle body closes, to me that supply had some authority. We took it out. So if we took it out, maybe there's some authority to go the other way, and this could be our first clue. That's how I view it. I'm not saying it's right or wrong, but I would take this setup any day of the week over and over. And for the most part, it's usually successful.
Right.
But
Alright,
yeah,
thank you.
no,
I
you're
got
not
that.
wrong in saying looking at it your way. I'm just saying, what is it? What does your risk come down to? How much risk are you willing to
So for now,
take
I'm
and tolerate
risking 0.5% per trade.
on a funded account?
Oh, not on a funded, just my own personal.
Oh, okay, yeah, that's fine. Like on a personal, I say risk anywhere from that to 2.5%, depending on the size of your account. The bigger your account, the smaller your risk should be.
Yeah.
Yeah, no,
Okay.
that's totally fine, dude.
All right. And I have another question. I think in your backtesting session number 1, you talked about how, for example, if you have a swing low like this and then a swing high and then a sharp move down, you can
Yeah.
look to short from this area.
Yeah, sometimes I'll take that. It all depends how it forms. So what I'll do in that sense here, so let's just clear this a bit. Let's see. So you have a swing low, you have a swing high, and then I said you could possibly look to short from this area. So the first thing you're going to look at is how the rest of this range forms. Is there liquidity left sitting here? If the liquidity's been cleared here, is there any reason for price to return there? And if all the liquidity has been swept, our first clue is why would price return there? The market's going to seek out liquidity here, and then if it wants to go back up, then it'll go. But if the range is cleared, there's no reason for the market to go there. Now, for me to use this point, it needs to be a clean push down. So what I mean by that is I can't see like this. Like I want to see something like this. I want to see a clean push, because in this case, this becomes hate to give ICT credit, but he calls these breaker blocks, and to me, this demand becomes the point of supply when there's a clean push through. Because what happens is every time you take a buy order, the bank takes sell orders. They have to have the opposite order. So when this happens, there is no interaction between buyers and sellers. This was all sellers. So what is the market going to do? There's going to be resting. Exactly. The market's going to rebalance. There's resting orders sitting here because there was no interaction. So the market is likely to come back here. And if this created any new structure, there's a good chance once the market rebalances, it will continue. Now, if you have resting liquidity sitting above this point, then then you have to be more aggressive on managing, because you could come back and look at it. So it all depends how the range is left. If the range is wiped clean, there's no reason to be there, and the market's going to go lower, get more liquidity. Once it has that, it may return up. But if you ever look at the way the market forms, it creates a sort of a bowl. So here you have kind of a bowl. What did the market do? The market came and rebalanced all these orders. So your whole void is filled. So now you have sort of another bowl. Now the market's kind of like half balanced, right? So you took all of this liquidity. I was kind of hoping to see it tap into this point and go up, or basically short and take that daily low, because that's my ultimate target. But every time I look at a range, I look at how the range is left. This here, nothing left here. So what's likely to happen? We're likely to go down and grab a bunch of the resting liquidity. The market always needs liquidity to move, because whenever the bank doesn't get their orders filled, they generate the liquidity, meaning they took both the buy orders and the sell orders in here. So as price goes up, they're making money on their buy orders, but they're at a loss on all the sell orders they took in here. So what's likely to happen? They're likely to go down and start getting rid of these sell orders and collect more liquidity. And what are they going to do here? Park price, sell orders, and then they'll pick a direction. Obviously, we don't know what direction is until the clues are made for us, but that's kind of essentially how I look at that, if that makes sense.
Yeah, that makes sense. Thank you so much.
You bet, man. Hold on. Oh, there we go. Perfect. Does anyone else have any questions? If not, it's totally cool. I can end this early, but I was kind of planning on staying till like 10:45, still another half hour. If you guys have the questions. If no one has questions, I'll obviously cut this short. It's totally up to you guys. Ask away anything you have. Because I know a lot of people type me Instagram messages and send me charts. Bro, look at this. Bro, look at that. I'm like, I would rather show you guys via live stream, because it's a lot easier to explain while I talk than it is for me to look at your charts and try to figure out what's going on. Because most people send me a chart with one time frame, and a lot of times it's a pair I don't trade, so I really have no idea what's going on. But yeah, if anyone else has any questions, definitely shoot away, type it out, unmute yourself, whatever you want to do. And if not, that's totally cool too. We can end it here, guys. Totally
Rob, just one question. So I'm planning to attend the FTMO sometime in October. I feel pretty confident with like the concepts, and then I've been attending your like Q&A and back testing sessions. So I feel pretty confident. But in terms of like management, what would you suggest? Because my thing was risk 0.5% per trade, and then if I have like 2 losses per day, like I don't trade for that day anymore. I wait for the next day.
Do you want my recommendation? I would say trade 0.25% until you build a buffer. So
0.25%? Okay.
Yeah, trade 0.25%, get a bit of a buffer built. So say you're up 2 or 3%. Then if you feel confident, go up to 0.5%, but don't just trade 0.5% off the bat. And then if you take a couple of losses with the 0.5%, go back down to 0.25%. But don't just jump right to 0.5%. A lot of people, including myself, if I lose $250 or $500 in the day, I can usually handle that I start losing a grand a trade, it starts to mess with your head. So
Yeah.
I would say go small in the beginning, and then once you have a buffer, definitely build it up. But if you start losing the bigger trades, you got to go back down to 0.25%. And I promise you, you will be further ahead with the 0.25% in the beginning. And I would also recommend do the free challenges a couple of times. Make sure your management's on point,
Yeah.
because
So
as
in
soon as
terms
you
of
get the real thing, it's different.
yeah. So in terms of partialing, like my thing is like I do 20% partials, just like I think you do that as well, as like 1 to
Yeah.
4 risk reward.
Yeah.
But I get confused on like where to take the next partials. So like I usually want to take my like if it's reaching like a strong demand zone, I partial off 80% of my position and I let the 20% run. But would you recommend moving the stop loss to break even, like after a significant demand point has been reached?
So for me, I have, well, if you've attended my back testing, I've talked about a couple different ways of managing. Something like this, I'll partial out 20% and the stop will stay open, and I'll wait for my TP. And if it comes back and hits the stop loss, that's fine.
Okay.
Something like this here, I took this trade and I took some partials down here somewhere. I moved this trade to break even in case Powell said something where this went like this, so I didn't need a bunch of slippage. So I'll never leave a stop open if there's news. I'll
Right.
never leave a stop open if it's like 3 pips or larger. I think this one today was, what was it, 1.5 pips. So something like this, you could partial out 20% at 4R. You could partial out again, you know, somewhere at a level like this, because this is obviously some sort of demand here. So I think I took partials right around here actually. So you take, it's totally how you want to manage, but whatever you do, paying yourself's important, but not losing money is even more important.
Yeah.
So yeah, if you're waiting for news, I go break even on news, because there's just no, a lot of times you eat slippage anyway.
Yeah.
If you're break even and you took partials, no matter what happens, you're gonna make money on the trade. Like this today, this I think I left 50% of my trade running, but I still made money even though it took me out. But yeah, usually I like to hold 20 partial out 20%, then I'll hold this to TP. Now, if this happens to be like, this is only a 8.5 hour trade. If this happens to be, you know, like something like this, just go to, let's say I was shooting for the fucking moon here, and we were going here, and it was like a 20-hour trade. Well, chances are I would probably take partials halfway, take partials again here. I wouldn't just sit on the whole amount. So it all depends how far, how long I'm planning to hold the trade. The longer the trade goes, the more I'll make sure I pay myself, because ultimately you have to pay yourself. Otherwise, there's no point in doing this.
Yeah. All right.
So yeah, that's management to me is very different. And this is how I manage euro. Like gold, I manage completely different. 1-to-1R, I go break even because it moves aggressive enough. Whereas euro, I find 20% at 4R seems to be good. A buddy of mine does 33% at 3R or something, or 30%. And he finds that works better for him because he gets risk off quicker. So ultimately it's down to you, whatever way you got to protect your capital and whatever way you got to pay yourself. This being the way this formed too, we had created a new low here, right? And I don't think we actually turned, yeah, I don't even know why I marked this. I might have screwed up here. Yeah, that's not even structured really. So this is ultimately your low. If you're still counter trend at the time, so right here we took the lows, which would be, yeah. So we didn't even become bearish till after the trade. To me, that was just something expected off 4-hour. But if you're going counter trend, have a way of paying yourself, or at least have a way of breaking even. If you're going pro trend, you can definitely, you know, hold a little more of your position size a little longer.
Okay.
If that makes sense.
Yeah.
Let's see, what zone should be your POI? or hold on. Can you give which time frame is the most suitable to find order blocks? I would say 15 to 30 minutes for your micro blocks and 4 hours for your macro blocks. Can you give some information about how to know on decisional POI? Ultimately, you want to look at what they did. So this POI here, this initial wick, it took this high, so it gave us this price jump. And what's likely to happen? Well, this OB is likely to get mitigated, which I believe was actually yesterday's trade. Yeah, it was. You look at what the POI did. So this one gave us higher prices, new structure. So we're likely to test this again. This one here was kind of a weird one. It really didn't do anything, where this POI is what gave us ultimately the higher push. But now if you zoom out, you can be looking at this like, well, could this possibly be inducement? We could very well react to this POI and this could be inducement, and we could very well react to this POI and this could be inducement. You never truly know. If I did, I would be hitting off a way higher percentage of trades than I do. And obviously I don't know what POI is going to hold. I have a good idea of what's more likely to hold, in the sense of, did it give us new structure? Does it have inducement? Was there aggression moving away from this POI, such as this candle here? All of these things come into play. Even if you look at the POI up here, how did that top form? Well, that top formed very aggressively. Look at the size of that black candle. There was some serious aggression down. This is a POI that's likely to get revisited, right? I always look if POI gets engulfed, or if there's a long wick. So right here, again, the POI gets engulfed. You have a sort of a supply here, it gets engulfed, this gets engulfed. Like, I like seeing stuff like that. Again, another POI here, the candle gets engulfed. These are all things I'll look at. If the candle doesn't get engulfed, then there's sort of like, so this is kind of lacking momentum here. And the only reason this is a good POI is because the chalk completed here. So it's got to do something. And ideally, you want to see it take liquidity. So if we actually dissect that POI there, let's look at yesterday's short. I actually took this short. It took me out. I took it off of here when it came back, and I think I put my stop right up here. And the spread actually took me out on that. But if we look at this right now, what do you notice about these equal highs? Here, it looks like you have equal highs. What do you see on the 1 minute? You actually swept the highs and you don't have equal highs. Does price need to revisit that? Probably not likely. How did we leave these wicks here? Well, they're over half mitigated. Is there any liquidity here? Does price need to return up here? No, it doesn't. And sometimes you need to cycle through a couple of POIs to look and realize that price doesn't need to go back there. But even right here, you have a long wick here. What did that do? Cleared out your equal highs. Price doesn't need to go back. Long wick took your liquidity. Each time you make a little range, you want to clear it. Like here, you sort of have rest in equal highs. We didn't take that, but ultimately I like to see wicks and I like to see the POI clear the liquidity before it moves. So that's the best way I can describe POIs. You can narrow them down to what's more likely to hold, but you will never know what the best POI is. The only thing we can do is draw them out, and then we look at how it reacts to this POI. And if we get a chalk and flip, and you have some narrative to short this back down, then maybe you're right. I took this short off of this demand breaking and us having this range wipe and us being bearish on the 4 hour and having a weak daily high. I took this off of this area here. I also looked at the V-shaped reaction and the aggression down. Like I said, unfortunately, I got taken out when it retested this area, but the idea was valid. I just didn't give it enough room to breathe, which is fine, but every one of your ideas needs to have some sort of sense on the higher time frame, and that should kind of help you make sense of it, if that makes sense. What else do we got? What zone should be your POI? Same question. If you price enter in 4 hour POI and 15 minute what your LTF chalk to know that's a genuine reaction to take entry on the 1 minute. So, okay, let's go to 4 hour. So here we tapped the 4 hour POI. We were obviously bearish coming down. Before this whole leg, how is price acting? Well, every time price goes up, it kind of goes slow. Every time it goes up, it goes down. We're very aggressive down. Slow, aggressive down. Slow, aggressive down. So what can this tell us? So we could say that price is very slow to move up, but very aggressive to move down. So what is likely to happen? We're likely to continue down, expectation order flow. But if we want to start buying down here, how do we formulate that idea? Because nobody wants to wait for this high to go. So this is where I will go down to the 15-minute POI. And this is what we were talking about here. You have a supply that took this demand, which ultimately, to me, that supply has some sort of authority. When that got taken, I would have looked at buys all day long, even though we're still bearish. And you have to start formulating a plan of, okay, we're bearish on 15 and 4 hour, but why would I buy this? Well, we had a supply go, and as I can tell right now, anytime demand gets tested, demand's holding. So if demand's in control, would it be safe to buy? Absolutely. Where is it safe to buy to? Well, in theory, we know the 4 hour equilibrium is here, which is this leg down. We should be testing at least the equilibrium. Once the equilibrium gets tested, there's a good chance price could reverse, but we don't know at what level. We just know that usually price rebalances at 50% and higher. So once this is met, I'll kind of look at how it acts in here. We had 2 or 3 chalk and flips in here yesterday. All the guys in Phantom, you've probably seen them all. And ultimately, we continued higher. So that's kind of how I filter through that stuff. What condition can we take a chalk entry 15 POI directly without a flip? As without a flip, just chalk. I see mostly flaming. Hold on. Let me just read these in order. Can I consider liquidity grab as break the structure? I doubt whether it's considered or not. I'm not sure what you mean by that. So to me, just going back to this example, if we look right here, you have resting liquidity here, you have resting liquidity here. You came down and wiped all of this liquidity. There's no reason for price to stay down here if it wants to continue higher. If price continues down lower, we might react to something else in the 4 hour OB, in which case, if it does and we want to buy it, we would wait for the next 15 supply to break before we formulate a buy idea. So if it came down here and supply was holding every time it tested, what's likely to happen? Well, you're likely to continue through this OB, and you're likely to just continue shorting and follow expectation order flow. Yes, you're in discount, but you're ultimately just going to follow the leg till it takes you out. So I hope that makes sense. Is the order block invalidated if the candle only wicks into the zone, but it doesn't close inside? So there's a, hold on, there's a different way of looking at wicks and bodies. And I like to see a body close to invalidate the order block. However, this was Euro from a few days ago, and it was kind of not a very nice session, but you start looking at these wicks, and for the chalk to complete, we want this to happen. But if you didn't want to wait for that, how would you formulate a plan? Well, you would turn this around and look at the flip side. What's happening here? Every time we test supply, we're holding. Well, is there any other idea to short this? We start, price actually starts coming down. So if supply is holding and wicks are going this way, to me, that's price reaching. And what I mean by that is if you're on an edge like here and you see long wicks, to me, that's rejection. but this would be your edge. If wicks start going like this and you're breaking sort of structure and supply is holding, to me, this wick's reaching. And if it's reaching, you could wait a little longer, be like, okay, well, what do you have here? Well, you have another wick here. This wick breaks it. You have that wick there. This wick breaks it. You have this wick here. This wick breaks it. Now, going back to our original plan and looking at the details, is supply still holding? Any which way you draw this, supply is holding, but you have wicks that are consistently reaching lower. So if you have consistent wicks that are reaching lower, and this one disrespects this demand, this one disrespects this demand, and all these wicks are getting disrespected, look to the left. You had a long, long reach here. So now you could say the sell to buy wicks, which is your point of demand, has been mitigated. And ultimately, it failed to react. What happens to a failed reaction? Well, failed reaction is essentially a weak low. It failed to take this high. What's likely to happen with the weak low? We're likely to run it. Why should this demand stay intact if there's no inducement? It shouldn't. If this fails to react and there's really no inducement as you're coming down here, you can actually start formulating a plan to run this low. Would I hold my whole position size to here? No, I would pay myself at this demand in case it holds, but you would leave a partial on in case it runs this. That's kind of how I view my POIs as it happens, if that makes sense. And this is why you'll see a lot of people say trade one pair or two pairs at the most, because you cannot notice these kinds of details trading 12 pairs. What else do we got? At what condition can we take a chalk entry 15-minute POI directly without a flip? I always pair the two together. So the way I do it is if it's counter trend, I need to see a chalk and flip. If it's pro trend, I don't need to see a chalk, just a flip's enough for me. So I hope that kind of makes sense. Because if it's pro trend, to me, if it breaks, let's say we're bearish and it came up, if it breaks 1 minute demand, I will look at how that demand reacted, the reaction point, and what took out that reaction point. We're pro trend. Being that we're pro trend, I will feel more than comfortable shorting that as long as it came off a 15-minute POI. So hopefully that makes sense. Does anyone else have any questions? Oh, hold on, what do we got here? Do you use 4-hour order blocks for day trading? Yeah, I do. And to fine tune it on the 1 hour, I actually don't go on the 1 hour at all. If I can't see something on the 4 hour, I don't care about it. But when I say 4 hour, I don't mean just 4 hour OBs. I'll look at, let's see if I can find a couple here. So this here, for example, while we were here, like I would pull this as a demand. You could see we reacted to it. That's probably like a 2 hour order block. This here, I would pull as a 4 hour order block. So these sell to buy wicks. So if it appears on the 4 hour, it's important enough to me. If I can't see it on the 4 hour and it happens to be a 1 hour POI, chances are I'll see something on the 15-minute anyway. So I stick to 4 hour and I stick to 15-minute, and then I stick to daily for my actual bias. So if we go back to daily, why you got to formulate a plan of why would we go higher? Well, if we could go higher because we're unconfirmed bullish, we took this high. We could go higher because we have equal highs. Why would we go lower? We have a weak low that failed to put in a high. So I'm not biased either way. I would prefer to see this low go. And then what's below this low? Well, if we look, you have this long, ugly ass wick. And if you look at the date, this is the US presidential election. I don't know how we'll react to it, but if this low goes, I don't imagine we're just coming through that. I imagine there's a lot of money and there might even be some sort of protection here that wants to keep price above that. I don't know. But if we come down and take this low, I would definitely expect to see some sort of reaction off this order block, as that's the US election. And no, I don't know what it'll do, but I definitely expect a reaction from it. So hopefully that makes sense to you. The way I recommend time frame, pick 2 and stick to it. Like I got a few buddies that trade 1 hour with 5 minutes. That's fine. But don't be looking at like 5 minutes. Don't be looking at like 5 minutes, 10 minutes, 15 minutes, 1 hour, 4 hour, 8 hour. You'll more than likely get confused. The only time I'll cycle through anything different than 4 hour and 15 minutes is if I can't find a clean POI. But as far as the macro POI, I don't want to go below 4 hour. I'd rather go to 8 hour. And for those of you that trade GU, you'd probably notice that GU's cleaner using the 8 hour order blocks and the 30-minute POIs than it is using the 4 and 15. It's all what makes sense to you. If 1 hour makes sense to you, pair it with 5 and 15 and stick to that. But don't pair it with 4 hour and everything else. Like I don't really even pull my daily order blocks. I look at a directional bias on daily and I will refine on 4 hour. So I hope that kind of makes sense. Yeah, so I got about another 5 minutes here. If anyone else has any questions, if not, we'll end it right here. That's totally fine too. Whatever, totally up to you guys. And if you did miss something, I'll throw this up on YouTube later. If you complain about HD quality, I will probably block you and never talk to you again, because it's not up to me, that's up to YouTube. And they seem to have, some days you get HD in 1 day, and some days it takes them a week to process. I don't know why they're like that. They used to do it within an hour or two, but maybe my account's not big enough, I don't know. But yeah, anyone else have any last questions, or should we end it here? I've never heard that on GU. Thanks for that nugget. I actually, that's not even from me. I actually read that from the EU chat, and it came from Sketchy, and I actually just started looking at myself. I'm not looking at GU anymore, but I started looking at it, and I'm like, it actually makes more sense that it is cleaner, and it definitely helps because the pair's a little more aggressive, so a little higher time frame seems to be a little better. But yeah, that's not mine. That came from Sketchy. Tips for how to trust your analysis. Honestly, you're probably gonna doubt yourself till you start landing trades, or at least see your analysis go, and that's totally cool. Like if I have a few winning days in a row, you obviously get a dopamine rush. You feel good, and everything you take, you're gonna trust. If you start second guessing yourself, and you'll talk yourself out of trades, and you'll see them go. And honestly, I miss trades all the time because I'm just like, no, I shouldn't take that. Well, prime example, my girlfriend's seen this buy right here, and we tapped the POI chalk flip. I was planning to sell off here, even though this is counter trend. Would it be valid to say this trade was valid to take up to this OB? Absolutely. Why? Well, we're planning to sell off this OB. It needs to get mitigated. This is equilibrium here. We know there's a high chance to hit it. And she was about to execute this trade right here, and I talked her out of it. But ultimately, as long as you have a reason behind your trade, it should be fine. And you won't trust yourself till you start landing more of them. Some days I trust myself with everything. Other days I talk myself out of everything. And that is the battle of the mind. That's, I think, something that gets better for everybody with time. Do you take entry if the order block is very old, 2 months old or more? Depend what time frame. If it's like 15 or 4 hour and it hasn't been tapped, I don't care how old it is, I'll probably form a trade off of it. If it's been tapped a bunch of times, I would be hesitating. What's the win rate of this SMC? I would say around, like myself, probably around 40%, and then you probably break even or lose on 30 or 40%. So you'll win about a third, you'll break even on about a third, you'll lose about a third. And given that you should only be taking 5 Rs or bigger trades, that's a very profitable scenario. Now, if your win rate's lower than that, obviously refine a couple things, then maybe start doing things like only taking the extremes, only taking the higher time frame order blocks. Like myself, I'll take something really sketchy that I shouldn't if I'm up on the day. If I'm down on the day, I will likely wait for a higher probability trade than taking something that's I think should go, but it's lower probability. So everything comes down to that. You want to end the day in profit. If you're not in profit, don't be throwing trades at just anything. You know, if you're 6, 7, 8 in profit and you want to take a short that's not very likely but could go, sure, take one. But if that doesn't go, don't just keep throwing trades at it. Be like, okay, I had a buy, I had a loss. Maybe I'll take one more, but no matter what, I'm going to end the day up, because that's ultimately what keeps your mind clean and your dopamine coming in. For those of you that follow me, well, I think a lot of you guys, even EU, the last 2 weeks has been very rough. And I took some losses. I took a lot of break evens. Like last week, I only traded 3 days because price action just wasn't the best. And the week before, I think I did end the week up, but it wasn't up by much. And this week kind of made up for that. But if you just follow your plan and try not to take every single trade you see, you should be profitable. If you're not, refine your plan, less trades, higher probability, higher time frame. That's my recommendation anyway. But yeah, we're kind of at the end here, guys. So what I'll do is I'll end it here. This will go up on YouTube, obviously, later today sometime. And we'll do another one next Friday. So if you guys get any more questions, we'll go through it next Friday. Have a good weekend, guys. And for those of you that are coming to backtesting on Sunday, I'll see you there. And for those of you that aren't, you probably should. But yeah, anyway, see you guys later.